Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. The stock market traded in a similar fashion this week as it did in the previous week, with sellers in the market Monday and Tuesday, and buyers coming back through the end of the week. Early weakness came on the Evergrande news again as worries about contagion continued, and other companies in China really looked like they were under stress. Of course, the real estate industry is about 30% of the Chinese economy, so it is absolutely amazing since they built all of those properties that are just sitting empty. And that is what the basis of their massive growth has been. And now with the crisis going on there, well, there's a lot of stress there in China. Also, energy shortages in Europe and Russia and Brazil and other areas pushed the light crude market up strongly again. It got early in the week, got over $81.50, and here on Friday getting over $82 a barrel. So very, very strong energy market, and we certainly don't know where that's going to stop. Our analysis turned positive on that weeks and weeks and weeks ago, and that has been just spot on. And fears about the FOMC minutes also put stress on the market early on, as the likelihood of a taper actually proved correct on Wednesday. But investors took heart as that taper, which is supposed to start in November and be completed by mid-year, didn't bring any sellers to the market. So that gave buyers a lot of energy. And with no apparent rate hike going to come until late 22, well, the buyers got very aggressive. Thursday, strong bank earnings brought early bids to the market, and we saw in the first hour the Dow up about 450 points, and everything was up about 1.5% early on. Also helping those strong gains for the market were strong earnings out of United Healthcare and Walgreens Boots, which are Dow stocks, and helped lift that Dow up. But the S&P 500 gains about 74 points on the day, and that's the best day since March. Friday, we saw follow-through as more strong earnings boosted the indexes again. Alcoa had massive earnings, and that stock jumps 12% very quickly in the day. That is a massive gain for Alcoa. And the bank stocks also got lifts as Goldman Sachs beat. And there's a ton of deal activity going on, which is really helping in the M&A category, all of that investment banking. So it's helping a lot of those stocks, and the financials have done better and help lead the market in this rebound. We've seen I showed you, I think it was a couple of months ago, the record IPO activity that's going on. Now, you can look at that two ways, that, well, there's a lot of activity, but at the same time, it is a warning because the supply of stocks does matter. And with all of that supply coming out, that could be part of what has weighed on the market over these last months. Yes, the high in the Dow Jones Transports and a lot of indexes were made quite a while ago, back in the summer. So the markets have been in a range-bound or topping period for quite a long period of time. But still, we get this big up day here on Thursday and following through here today. And so many, if you follow social media or a lot of the business channels out there, are talking about the market moving to new highs. That reminds me, and I'm going to age myself thinking of the sly in the family stone. I want to take you high. Well, it's just a different drug right now. Back then, you know what, it was smoking weed. Of course, there's plenty of that going on right now, but the drug is the funny money that comes out of the Fed and all this potential government stimulation. That's the funny money that has everybody who believes that while the market has made new highs for like 18 months, that it's still going to take them higher. And investors, they've done a great job of ignoring the coming taper as they're buying in the transitory inflation theme. But, over $82 a barrel oil, huge supply chain disruptions. Well, in their mind, no problem. Everything is good right now. And they are thinking, missing the next surge is a much bigger risk than anything else they see out there. So they buy, believing that just as they've seen for all of these months, we're going to continue to see the market moving up to new highs. But you really have to question that at some point. And I certainly do. I want to look at something here that I think is important to look at, and that is if inflation is actually transitory, then there is something here that I think is important to see. So let me just change this slide view here, and you'll get an idea as to this important information. So we saw the CPI, PPI come out this month, and you can see on this slide a picture of that year over year and month over month. Those little lines on the bottom are month over month, of an 8.6% year over year increase in the producer price index. That's the biggest that we've seen since the 70s. And back then it was not the PPI. They changed it. It used to be the wholesale price index, if you remember that. And here we are looking at 12 years back into the beginning of 2010, where we see this massive increase in the producer price index. Is it transitory? That's really the question. Are we in a place where you could just buy everything because there's no issues right now? Well, let's take a look at this chart right over here, which I think is really the most important one. Thanks to Zero Hedge for both of these charts, and this is the Ppi Cpi Inflation Gap. So this essentially, when you look at this, and this, by the way, is a record gap between the CPI and PPI, what this says is that there is huge pricing pressure in the PPI, and that has not yet caught up in the CPI. So the producers have had all of these huge expenses come in and they haven't passed it all on. That means that there is inflation built up in the pipeline. This record gap, companies, their margins suffer based on this, or they have to raise prices. Right now we're getting a lot of the bank earnings and stuff like that may not be as greatly affected, and commodity earnings might even benefit like we see in Alcoa. But when you get into the rest of the S&P 500 list, there's going to be a lot of them that have margin pressure. And when you look at this, there is still a lot of inflation ahead, and that could certainly be an extremely big issue going forward, and especially for the interest rates, which we believe are going much higher. So that's a look at that. And you think about this, President Biden, he promised that no taxes would go up for anybody who made less than $400,000. Whoops. And now I think you really have to look at that, because while that might be true in his policy, and he may not be able to pass that because of all the problems in the Democratic Party, that tax is already here. And that's what you're looking at. It's the inflation tax. And that doesn't get to everybody only over 400K of earnings. It gets to everybody and hits the people in the middle class and the lower classes even harder. So that's even here, and that is going to affect activity. And based on what I showed you about the inflation CPI, PPI gap, higher prices are yet to come. So there's a massive tax going on that we're all paying, and in my opinion, it's not going to get any better. The markets, of course, may cure it. As activity pulls back and interest rates go up, probably well ahead of the Fed. I think getting the Fed behind the curve. Actually, I see both of those happening. Economy slowing down and inflation still ticking up and interest rates ticking up, and that is not a great scenario for stocks. So despite this big 3-day uptick in the market, there's resistance overhead. And the hope for the market jumping up to new highs, well, I think that's a mistake. And I'll show you what I'm talking about as we get into what will be a very full analysis of the indexes coming up in just a few minutes. For the week, the major index is up over 1%, though the Russell has done better. Our analysis showed the Russell in better shape, and that's gained about 2.5% on the week. The 30-year bonds up about 1 3/4 points. 10-year yields fall about 4 basis points this week. The gold market gains about $17. That's not a lot. The dollar is slightly lower, so that has helped gold and silver. Silver gets a big bounce, up about 64 cents on the week. And you almost can't get into this category without discussing Bitcoin. For our members, our Bitcoin analysis certainly has been revised. I talked about that potentially happening as Bitcoin gains $6,000 this week and $17,500 in just 3 weeks. As the news comes out today that they're going to pass a new Bitcoin futures ETF, so that brought a lot of buyers into the Bitcoin and cryptocurrency markets. I don't have to go into any depth to tell you what I think about those markets, and there is a massive washout coming down the road. It's just not happening now. The dollar, like I said, gets some slight pullback in here this week, but we think the dollar is going higher along with interest rates. Oil market, this is a 9-week straight run. Incredible. In fact, it gets over 82.30 as of this moment right now, which is the midday here on Friday on the 15th. So the oil market just exceptionally strong. That's up about 275 on the week. Again, the 9th week of these gains, which is just absolutely phenomenal. That's it for this opening. Coming up, we're going to have a review of the international markets where Arvi is going to look at the Australian market and the Korean market as a preview. And then I'm going to give you a full update on the indexes, including the VIX, coming at the end of the show with some revised analysis that we have. I want you to go to the askSlim.com website, become a free member, or I'll give you another way that you can take a peek at some of our other higher level content that we share. If you're on YouTube, please subscribe to the channel, click the bell so that you do get notification when we put up new videos, and do like this video, give it a thumbs up. On Twitter, follow us at askSlim. And if you need more information on our membership, you have questions about the huge offerings that we have for education and analysis for traders and investors, write to Matt. That's Matt at askSlim.com. I want to remind you that we're running what we call as our PCP, our Premium Services Preview. This is a free 7-day trial. No credit card required. All you have to do is go in and click the box in the middle of the front of the website front page, and what you're going to get for 7 free days is our SIR daily snapshot. You're going to get our live grid. It's our chart streams where you're going to see 3 indexes on 15-minute charts with all the key levels and momentum indicator that keeps you on the right side. You'll get the S&P 500 live multi-frame chart stream also, which has 4 different time frames on it and all of our proprietary indicators. You'll get daily trade ideas. Wow, I can't believe we're giving that away for free. And our Future Speak video on Wednesday, where I give an hour and 15-minute review of 26 different futures contracts. You'll get our Slimulator, which is our bull bear ranking system, which our level 3 members get. You'll see the 84 best traded symbols, and our Slimulator momentum tracker, over 1,000 symbols, 22 canned groups, where you could see the momentum conditions for all of those stocks and groups for longer term holders, investors, position traders. That's the Slimulator momentum tracker. All of that free, no credit card necessary. All you have to do is click on that box in the middle of the website. You have questions, you can't get that link to work, you can't find it, write Matt at askSlim.com and he will give that to you. All right, Arvi does fantastic work for us. Of course, Arvi is a expert cycle analyst, and he is going to share with you right now a a couple of pieces of analysis as a preview of our international markets video, which is done for members, which has a ton of countries in there. He's going to essentially give you a lesson in cycle analysis, which he always does, and I do the same thing in every video that we share. So, of course, you can get our 500 video whole library by signing up for level 2, 3, or 4, of course. So this is the preview international markets, which is level 2, 3, and 4 content. And please do sign up for that. So here we go. Great work by RV.
So this is the weekly cycle chart for the ASX 200, and these charts are all built on TradingView. For the ASX 200, we have this dominant weekly cycle, which is broken up into these minor half cycles. We have had these cycle brackets on this chart really for many weeks here, and they have overall been really quite clear. We were in this rising phase here with the dominant cycle rising as well as the minor cycle, and you can see the beautiful rally we had. And then we had this very mild little flag that formed here into the minor cycle low. Once we formed that low, we got into the rising phase on that minor cycle. You can see the rally. And then we had this failure that we noted right here, which gave us some signs that a high was forming in this dominant cycle. After that, we got a rollover in the weekly momentum right there. I have added in a red arrow to indicate that. And after that, we got into this corrective period on the dominant cycle. So what's going on right now is that we are getting really quite late in this corrective period and are looking for a bottom to form here in the ASX 200. You can see some early signs of possible bottoming right here with a little bit of a bullish candlestick pattern right there, but really looking for just one more test of that low, likely into that early November time period, and then for this to move back to new swing highs. So this is a very interesting longer term pattern here in the ASX 200. Let's go ahead and shift over to the daily chart. So this is the daily chart right here. And what we're looking at is, as I mentioned, just one more dip on the downside. You can see that we're in this rising phase on this daily cycle. We're getting a modest rally, really looking for this to fail in this zone here from 73.84 to around 74.54 or so, and then look for this to give one more rotation back on the downside to retest those old lows around 71.50, and then that next larger impulse likely on the upside in that early to mid November time period. So that's really what we're looking at in the S&P ASX 200, a very interesting longer term pattern and really a very bullish pattern. We're just looking for that next buying opportunity here, and we'll be watching this over the next few weeks really very closely. So a very bullish pattern in the S&P ASX 200. So this is one that we have been bearish on for a little while here. We saw this breakdown below that key weekly low here at 3103 right there. Then we got a little bit of a flag in the context of negative momentum. That's one of my favorite patterns here, and you can see that really nice follow through back down to retest this major 38.2. What's going on now is, as I'll show you on the daily, there is a short-term bottom due. So we would look for another flag to form in the context of bearish weekly momentum, and then for this to resolve one more time on the downside into that dominant low timing, which is due right around the end of the year. So a bearish pattern here in the Kospi. The zones on the upside that where we would look for a failure is this 30.60 up to around 31.60. If we go ahead and shift to the daily chart, we have modified these because I really didn't like this low that we had here. We in our previous video, we had our key low right here that didn't really make a whole lot of sense to me. So we have modified this and really are seeing clear dominant cycles right here. I'm just going to draw them for you so you can see. This is really much clearer to me right now, and you can see what they indicate is that we're in this short-term rising phase right here, looking for a move up to this zone that I mentioned from 30.60 to possibly up to right around 31.60, and then look for this to fail back on the downside. So this is likely going to set up a short side opportunity here in the early to mid November time period. Note the overall bearish daily cycle structure here with a lower cycle low relative to the prior low. So we'll have to see if we get a lower cycle high relative to the prior high up here, but that does seem likely given the overall bearish conditions that we see here in the Kospi.
All right, absolutely great work by RV. You can learn to do that type of analysis also, and I'm going to tell you about that in just a second. I'm going to give you also our update on the stock market, but first I want to tell you about how to become your own cycle analyst to understand the work that we do. We run a special basically about once every 9 months or so on the cycle analysis workshop. It's the type of method of analysis that I developed over these 47 years since I've been a trader. It took me 2 years to write this workshop, over 6 months to produce it. There are 20 video modules plus many tools for text videos in there. Between the workshop, which is over 15 hours, and probably another 15 hours or more of tools for text videos that support it, you're going to be at this learning more than you could ever believe. You're never going to look at charts the same way as you will after you learn this style of analysis. In addition to that, on November 23rd, we're going to hold a live event for the workshop members. And all of you that sign up right now, you'll be able to come to that for free and ask questions. So now's the time to do that, and then you'll have plenty of time to review the workshop before we get there. So this is just an unbelievable workshop. If you go to askSlim.com and go to the workshop for info, there's also a front page link that you could sign up. And you can ask Matt for a demo reel with clips of some of those videos. This is 46% off, and it's for only the next week now. We've been offering this for a week. We've had lots of people sign up. You need more information, write Matt at askSlim.com and go to our front page. There is a right on the top nav bar, look at workshops, look at cycle workshop. There's a video in there for you to see. There's lots of information about it. So I really encourage you. This will make such a huge difference in your future as a trader and investor to understand stocks and futures and everything that's listed with this paradigm, with this different way to look at the markets, a different way to look at analysis, and you'll be able to understand conditions just really at a glance. So it's so important, I think, for everybody to get this different perspective from what has been taken by so many people, and just a very different from the normal way that analysts look at markets. So please do consider this special 46% discount just the next week that this will be available. So take a look at that right now. This is a stock market update. Back last Wednesday on Future Speak, we had talked about the likelihood of the market declining for a couple days, and the market went straight up. So when that happens, it's really a great opportunity, because when things change in the market, it says to us, well, let's look at what changed. Let's look at what we need to look at to project forward and get the highest probabilities that we can. So that's why the cycle analysis is so good, because it encourages you to look at how money flows are changing, what could be going on that's changing, and then what I do is I update the chart, send it to our members. Now, it's unusual that I would do a complete full update looking at all of these on weekly and daily charts at this time. We reserve that for our membership. The only thing is that I didn't have really time to do anything so specific and so detailed since the revision on the analysis. So I just decided to put it in the free video here. But this is very, very rare that I would do that. So you're going to get another lesson in cycle analysis right now when I look at this. And also how cycles do shift and what we have to do when that happens. It's so important. No analysis is perfect, but one of the great things about cycle analysis is that it very quickly tells you that you need to do a revision, and that's what I do. So let's take a look here as we look at the S&P 500. So this is the side-by-side chart that we look at when we do our Future Speak show on Wednesday. where we look at a weekly chart and a daily chart. And we do cycle analysis on all of our weekly and daily and monthly charts when we do any analysis. Cycles are the core of our work. There are two other core aspects. One of them are the momentum conditions, which you can see on the weekly chart right over here, on our reversal scout, and the daily chart right over here on the slim ribbon and the slim ribbon PO on the bottom. So that's what we do as far as the first two core aspects of the analysis. The third part is what we call swing high, swing low analysis, where we put in the resistance levels and the support levels, and we have now completely updated all of these for our members, which I'm sharing with you. So let's take a look first at the weekly S&P 500. So when I look at the cycle brackets on the bottom, the cycle brackets are simply the ideal. In other words, if there was a perfect rhythm in the market, a rally and a sell-off, a rally and a sell-off, and there's a dominant cycle and a minor cycle that you see in there. The dominant cycle is the dark blue, and the minor cycle is a dotted line that you see right in there. The regularity that you see here, and these yellow areas are points of correction right in here and here and here, is really good. This was very confusing because the decline was very small, 3.6%, which is extremely unusual. And if you look at these cycles right over here on the bottom, the ideal, and if you put an influence on them on the upside, which is we call the directional component, then the principle of summation, adding all of those things together, give you this perfect uptrend that you see right in here following these cycle rhythms. Now something happened, something changed in here in this last cycle, and that is, while these other rallies have been strong and then coming down and then hitting support and then bouncing back up, this one rallied, made a new high, and broke below the 78.6%. In fact, it challenged this last low over here. When that happens, the probability of moving to a new high in the next cycle drops sharply. The probability goes from 70, 75, 80% to making a new high to, when you break this low over here, getting down to less than 1 in 3. So about 30% chance of moving to a new high. This is certainly strong, but it's gotten into the resistance area. Were it to have broken this low right over here, the probability of going to a new high would be less than 10%. But it held above that low, broke the 78.6, and it really should stop somewhere in this resistance zone right here and not go to a new high. The odds of making it to that high again, as I said, are only about 30%, and it's done a good job so far, getting up pretty strongly. Then the next bigger corrective period is out over here, as you could see in that projection. Even if the market was to manage up into a new high, this would still be a riskier period coming right out over there. So that's a look at the weekly in the S&P 500 SPX. So now when I switch over to the daily, what we put in here are called complex cycle structures, where it gives us some sense about the, again, the cycles and the what we call configurations or translations, which a positive configuration closes higher than it started, has a higher high, higher bottom, as you see right in here. And then what happens is that if it comes down and takes out the key low, it gives you a sense that the trend is changing and moving to the downside. In this case, all of the strong momentum, as you can see here in the slim ribbon PO and the positive signals, then turn negative in here. But now it has neutralized as it has this big upward move. So what happened in here was that this cycle right here, which normally have been running 21, 19, 23 days, 21 days, lengthened by the length of one full minor cycle to go out to 30 days. This is unusual, and it forces us to move the cycle out by that distance and use this anchor point for the next cycle structure right there, which is what we did. And we did the same thing on the NASDAQ. Well, we didn't do it. Essentially, the market told us to do it because of the changes in here. What that does is give us a new anchor point right over here. and ways to do our swing high, swing low analysis to create the resistances. This blue area was the target zone off of the fib extensions. This is the intermediate resistances off the weekly chart right over here. So in other words, from this high to this low creates these resistances, just as I showed you on the weekly chart. This is the area that it should stop in. So this level right over here is 44.90. We would not expect it to get through there. Were it to get through there, it would raise the probabilities of getting to the all-time high, which of course is up here at 45.45. So right now, the highest probability is it stalls in this area and then turns down. But then you have these supports that are right in here right now, which are between this area of 43.95 and 43.50. So we would expect that we would get a pullback in here over this time frame. So what we looked for was the minor cycle to give you further decline right in here. But when the bigger rally comes here, it tells us only look for a couple day pullback. So this would suggest coming down into maybe Monday or Tuesday and then moving up again in this next minor cycle. And we have to see how far it can move up in there. And then the risks picking up again. So right over here around the area of 1020, we had the suggested minor low right over here. Well, because of the rally, that 1020 date doesn't change. It simply has a higher support area. Then you get another rally up, and then the next low projected somewhere around early November, and there's some variance in here of when that low could come. So it would be a decline early in the week, another rally, and then after that, the risks pick up again for another pullback. We would expect that area of around 44.90, 44.95 to hold it on the upside, and then for it to begin to pull back. So that's the update on the S&P 500. It's important to think about this timing and the fact that somewhere around early November, the market should be turning down into that time frame, because I'm going to show you the VIX in a second, which is important to the analysis also. So here is your NASDAQ with the same type of analysis on it. NASDAQ has a little bigger cycle that we have in there. And this was a 19-week low. Here's the minor low right over here. And because of the shift that we saw in the cycle, it confirmed this low on the S&P 500 on the NASDAQ as the minor low and the likelihood that we were in that next minor rally. Again, look where this low is and look at the fact that the NASDAQ broke the low. The probabilities of getting to a new high in the NASDAQ are 10% or less based on this analysis. It is very likely to fail right in this area and then set up what should be a much bigger decline out over here in December. Now, nobody thinks the market's going to go down November, December, except me. Based on the formations that I see right in here. Again, here is that extended rally, extended cycle right here, which moves out one minor cycle length, and then the new anchor point and the resistance level right in here. And because this broke the key levels, this is a sell zone right in here, and you can see it's gotten right into that right now. This also is a sell zone, and this is your intermediate fib extensions, your short-term fib extension, sorry, which it's coming up right to the bottom of that level right now. So we do not expect the NASDAQ to have a lot more upside in here. And if anything, this looks like the NASDAQ would be the weakest of all of the three indexes, as I'm going to show you. And if you were a pair trader, and especially using our stock index report live stream, you'd be looking for days where the Russell was stronger than the NASDAQ and doing that kind of an intraday pair trade. Again, here is that pattern right in here. We're looking at the negative momentum right at this right in here. We're looking here where the S&P 500 turned neutral momentum, that the momentum is still negative in the NASDAQ, so it shows you that it is weaker, and the likelihood is based on the shape of these patterns that there's going to be a minor decline into the beginning of the week, another attempted rally, and then another bigger decline out over here into the early part of November. So we would look for a pullback into this support area, which is under 14,850 down here to about 14,680. 14,850 to 14,680 would be the target for a pullback in here around into the beginning of November. So you can see clearly the NASDAQ is weaker than the Russell. Here is your Russell right in here, and I'm going to blow this up for you to see. This is amazing. The Russell has been in this range for 42 weeks. This whole year, it's been in this same range. Now, we saw the Russell strengthening in here as the momentum conditions have kept waffling, and now it's in a positive momentum condition. Here's your minor low right over here, your first or second week of this advance. And this has the greatest probability of taking out the all-time high. In other words, this low-cap zombie stock index is the one that looks the best right now, and the one that could move to new highs where the other ones are not in anywhere near as strong a condition. So momentum strong in here, and the cycle patterns in here did not shift. They're exactly as they were, and you could see these complex cycle patterns just have been just waffling back and forth within the same range. And now you can see we're way up here hitting this target zone, with the potential of making new highs here, even getting up to about 2360. So you can see that the way that projects much stronger, and we would expect, looking at this daily pattern, that there's a pullback here again into November, but this is later. This is about the second week of November right here, and this really could continue to remain the strongest of all. Now, it rallied right to there, and it's pulling back some today, gave up some ground, but now everything is pretty much dead in the water. But we would look for this to be the strongest index, and again, getting up potentially to new highs. You could see the positive pattern here, the positive pattern here, the positive pattern here, and that's these green arrows that show you that right there, that these configurations are positive and do suggest moving up. We told our members last week on FutureSpeak that even though we were looking for a brief couple of days to go down, that this really was looking like it was going to lead the way on the upside for the next rally, and that's certainly what happened. So we looked at the S&P 500, we looked at the NASDAQ, and we looked at the Russell. The Russell the strongest, the NASDAQ the weakest, and we would look for some significant pullback into early November in the NASDAQ, that being the weakest of all. But overall, these patterns in here are not really subject to big declines right now. They're in S&P 500 and the NASDAQ in resistance, but again, not looking for real big declines yet. As we showed in these patterns, really it's quite a number of weeks that they could hold up overall, outside of some brief pullbacks that the market looks like, while not projecting to new highs, still could hold up for a while. I want to look at the VIX because this is really important to the analysis. Remember that we said that the NASDAQ, the S&P 500 comes down into sometime around November 4th after a little bit more attempted upside. The Russell to somewhere around the 10th or so of November, where that's due to come down. But when we look here at the VIX, this is really very important, and that it's suggestive of the fact that, and I'm going to blow this up, and these are really gorgeous cycle patterns that you can look at in here. These are the harmonic families right here, and when they're all nesting is when the VIX falls the most or the stock market rallies the most. You can see that. And that period ended right here. The green circles tell you the beginning of uprising phases, and these lines in here show you where all of that nesting goes on. So our members understand that. And what this shows you right now is that there's just another week or so of potential declining VIX before it begins to rise again. So we said the stock market likely to pull back a couple days and then rally again. That's likely going to give you this little pullback right there that we're looking for. And look at this daily chart right in here. I mean, this shows you the beauty of this cycle analysis right in here, where you had this declining structure going on in implied volatilities. And these areas where you see the gray areas are where all the nesting is, where the VIX falls the most, right over here, here, and right over here. After that, what happens? Well, then the VIX starts to jump up again. And what that says, in alignment with what we're talking about, is that sometime after about another week or a little bit more, you're likely to start getting implied volatilities moving up again. That is suggestive of what we're talking about, that you maybe get a rally in the stock market that goes into the end of next week. And then again, you start to get a pullback into November that could be, somewhat significant into those levels that we're talking about. So there is a window of time here on the VIX of about a week for implied volatilities to go lower, and then we're going to be looking for a jump up in the VIX in alignment with a pullback from the resistances that we showed you in the stock market indexes, and the potential for the VIX again to jump up to 24 to 26 sometime in November, based on what we see right over here. So that's a good look at the VIX, and the beauty of the cycle analysis that you can see right in here as it follows those patterns in a beautiful way, here on the weekly on the left, there on the daily on the right. And if you want to learn about that and learn about all the cycle analysis that we have shown in this video and in all of the Market Week show, it would serve you to take a look at our cycle analysis workshop special with 46% off right now that you can go see. Also, if you're just watching this on YouTube and not watching the whole show, you missed what I talked about early in the show, which is our popular services preview. You can see our very most popular services for 7 days free. All you have to do is sign up for that on the main page. It's down in the middle of the main page, and no credit card necessary. And just sign up for that. You're going to get a great peek at our analysis that we offer to our level 1, 2, and 3 members. Fantastic stuff that you'll get to see. Popular services preview. That is it. Gave you all of that update on the stock market. I hope that analysis was absolutely illuminating to you. You can really get a sense for the hard work that goes into this style of analysis and what we do to understand market conditions at a very core level of money flows in a visual way. That's it. I want you to be so careful out there. It is so crazy. And I'm always wishing you great trading.